Hello everyone. Today we are going to see journal entries. Now let us see what are those journal entries. This is the first slide showing the first transaction for today. That is, Raju started business with cash rupees 80,000. Now let us see what is the journal entry for this. First, cash account debit 80,000. As we all know that cash is an asset, and according to real account, what we have learned? We have learned that cash is an asset, it is coming in and we need to debit it according to the rule of real account. Then Raju's capital account credit. Raju is a person giving cash to the business and business is receiving. That is the reason why we have debited cash account. And we are crediting Raju's capital account because he is the giver of the business. According to the personal account, we have to credit the giver. And I have given an explanation here so that you can understand better. First, cash account. We have debited cash account as it is an asset. Yes, I think you all have understood this. According to the rule of real account, we will debit what comes in. That is, here, asset is coming in. So we have debited it. Yes, we have discussed just now. Then, Raju's capital account. Raju's capital account is credited as he is the giver. I have already said you, Raju is the giver of the business. So we need to credit him according to the personal account. This is the second transaction we are going to see now. So this is a transaction regarding cash purchases. Now we'll see what is the journal entry for this. First, purchases account debit 30,000. Now, we need to question why we have debited purchases account. I have debited purchases account because of some rule, because of some perception. What is that rule? What is that perception? Now, let us see that. Before that, we are going to see what we have credited now. See, to cash account we have credited. So with this, we have completed our journal entry. Purchases account debit to cash account credit. And the amount is 30,000 and 30,000. Is it clear? Yes. Next, purchases account debit. I have debited purchases account because I have treated this as an expense. And expenses and losses are to be debited according to the nominal account. And some people will presume this under real account. So what the real account says? Real account says debit what comes in. If you make purchases, goods will come in. According to that perception, according to the real account perception, you can debit this purchases account. Clear? Next, to cash account credit. We all know cash is an asset. It is going out. Assets comes under real account. So what the real account is saying? The real account is saying that debit what comes in and credit what goes out. So here the account is saying. So that is the reason why I have debited purchases account and credited cash account. I think it is clear for you guys. The explanation is as follows. Now let us see that. Explanation. Purchases account. So I have given the perception according to nominal account as well as real account. Then coming to cash account. Cash is credited as it is going out from the business and according to the real account it is saying that debit what comes in and credit what goes out. This is the third transaction. Goods purchased from A rupees 5,000. Now let us see the journal entry for this. Purchases account debit 5,000 to A account credit 5,000. Here you may raise a query that purchases account debit to A. Why not to cash? I will explain you now. Purchases account debit. Here we are debiting purchases account according to nominal account or real account. We have debited it. If we treat that as an expense, we have to debit purchases account 5,000. That is clear. Next, our query is that why not to cash? Why to A? Because this is a credit transaction. This is not a cash transaction. And how to identify whether it is a cash transaction or it is credit transaction. I will give you a hint. See, goods purchased from A rupees 5,000. Here, in this transaction, I am not mentioning in cash or from cash. Any hint I am not mentioning. Goods purchased from A. Only the name of the creditor I am mentioning here. If the name of the creditor is mentioned here, only then it is called as a credit transaction. You should not consider it as a cash transaction unless a cash is provided here. This is the fourth transaction. Goods sold for cash rupees 10,000. Now let us see what is the journal entry for this cash sales. Cash account debit 10,000. Here we are debiting cash account. Why we are debiting cash account? It is an asset, and asset comes under real account. What the real account says? Real account says debit what comes in and credit what goes out. Now let us see what we are crediting now. To sales account credit 10,000. And here why we need to credit sales account? Because there is one perception, that is according to nominal account we need to credit all incomes and gains. Sales generates income, so that is the reason why we have credited this 10,000, that is sales. And next, one more perception. According to the real account, we need to credit what goes out. If you make a sale, goods are going out. In that perception also, you can take the sales account on credit side. So that is why I have written cash account debit to sales account 10,000 and 10,000. Now let us see what is an explanation here. Explanation. First, cash account. As I have said you now, cash is debited as it is an asset coming in. According to the real account, we have to debit what comes in and credit what goes out. And next, sales. Sales can be credited according to the nominal account because it is saying debit all expenses and losses, credit all incomes and gains. If you make a sale, we will be generating income. That is the reason why we are crediting here. Next, sales can also be credited according to the real account, that is debit what comes in and credit what goes out. Here, if you treat goods as an asset, they are going out. In that perception also, you can credit it. This is the fifth transaction we are going to see now. That is goods sold to P 30,000. This is a credit transaction. See, let us see this. P account debit 30,000 to sales account credit 30,000. Here you may raise a query again. We are debiting P. Why not cash? And to sales account credit 30,000, and that's clear. Now there is an explanation for P account debiting. Here we are with sixth transaction, that is cash paid to A rupees 3,000. We can easily get through this transaction, that is A account debit 3,000. Here we have debited A account because he is receiving money. So that is the reason why we are debiting A account. Then to cash account credit 3,000, and we are crediting cash because it is going out. Now let us see what is the explanation for this. A account. A's account is debited as he is the receiver of the cash. As we have understood this, A is receiving cash, and according to the personal account, what we will do according to personal account, we will debit the receiver and credit the giver. So this is what we have followed in recording that entry. Next, cash account. Cash account is debited as it is going out of the business concern. It is going out of the business concern. According to the real account, we need to credit it. So that is what we have done here. This is the seventh transaction. Now we are in paid wages rupees 1500. Wages account debit 1500. We are debiting wages account. Why we are debiting wages account? Because it is an expense. Why we call this as an expense? Why not income? Have you ever raised this query? Yes? Okay then. See, wages account debit 1500. This is always an expense from the point of view of an business, and we have to consider the transactions and any aspect of the accountancy we need to consider from the point of view of a business and not from our own perspective. We should always do the concepts of accountancy according to the business view. Got it? So that is the reason why wages is considered as an expense, and expenses we will be treating under nominal account. Just now we have discussed what is nominal account. It is saying that debit all the expenses and losses. So that is what we have done here. Wages account, debit. This is an expense we have debited here. And we'll see what we need to credit here. To cash account credit. We will be paying wages in the form of cash itself. So that is why we are crediting cash 1500. Cash is an asset going out of the business. So according to real account, we will credit what goes out. This is an explanation as follows. Here we are with ninth transaction. Purchased for cash from Surat. This is again a cash transaction. Then we can think what is the journal entry for this. That is purchases account debit to cash account 5000. See, we are debiting purchases account. Either we can think this as an expense or we can think this as an asset. So in both the perceptions, we can debit purchases account. Then to cash account credit. As it is going out, we have credited cash account. Now let's explanation for this. Purchases. According to two perceptions I have given again here, as it is a different transaction from previous one. Cash account. Cash is an asset which is going out of the business according to certain rule, that is real account. Debit what comes in and credit what goes out. I have repeated lot many times. I think you got this point. And we move on to next slide. This is 10th transaction. Paid rent 2000 and salaries 5000. The speciality of this entry lies in recording two entries. See, this is one transaction, but we need to record two entries in it. Because we are recording two entries in it, it is called as a compound entry. Now let us see how are we going to record a journal entry for this transaction. Rent account debit 2000. First of all, we need to understand whether given elements are expenses or incomes. And we better know rent is an expense and also salary is also an expense. So these both are called as an expense. And we also know the thing we will debit the expenses under nominal account. So first I have debited rent account 2000. And then again I am going to debit salaries account 5000. Then these are both the expenses. So both the expenses I am debiting. Then in what form they are going out? To cash account credit 7000. So here this is one entry, and in one entry I am recording two transactions, that is rent and salaries. So because we are recording two transactions, this is called compound entry. This is the new concept we have learned in this session. Now we are going to see the explanation for this. Rent and salaries both will come under expense. So according to nominal account, we will debit all the expenses and losses, credit all incomes and gains. This is what we have followed in this transaction. Next, cash account. Cash is being credited here because it is going out of the business according to the rule of real account. Thank you for watching. Please like it, share it and subscribe my channel. Thank you.